Today's class will be focusing on a simple activity which will help us to understand the accounts which are associated with the transaction, what type of account it is, and then what is the effect of the transaction. Now, when we learned the golden rules of accounting, we saw that it will help us to identify is it a debit or a credit by applying the rule. Now, we will be doing out a very simple exercise. This will act as a foundation for us to go about with the preparation of journals. So we have 8 transactions over here, and this 8 transactions, we will be working it out in this manner. We would be preparing a simple table. In this table, we will be having the transaction. From each transaction, we know there are always two accounts involved. So we will identify which those 2 accounts are. Then we will understand what type of account is, or we'll try and identify what type of account it is. Is it personal, real, or nominal? And then we will try and evaluate the effect. Okay, is it debit effect or is it a credit effect? So this is how we would be going about with this particular activity. Now let us look at the first transaction. The first transaction tells us Mr. Kumar started a business with cash rupees 25,000. Mr. Kumar, he's starting a business and he's brought in a money of 25,000. The 2 accounts which are involved over here are capital account and cash account. The 2 accounts which are involved here are capital account and cash account. We know that whenever the owner brings in money to start a business, that is referred to as capital. Okay, we know that whenever the proprietor brings in money to start business, that is referred to as capital. So the 2 accounts which are involved over here, the first is cash. So we have cash account, and then we have capital account. We have cash account, we have capital account. Cash is what type of account? Cash is a resource, it is an asset. So this will be a real account. This will be a real account. Capital, we know capital represents the proprietor's money, and since it is representing the proprietor's money, this will be a personal account. This will be a personal account. So cash account, and then capital account, and then that is. Now, what is the effect? What is the effect over here? So when Mr. Kumar starts a business, he's bringing in cash. So cash you will debit. Okay, cash you will debit. Cash debit what comes in. So cash is coming in, and then who's giving the cash? Proprietor is giving the cash. Proprietor, we know a capital account is personal. Golden rule is debit the receiver, credit the giver. So you should credit this account. You should be crediting this account. Purchase goods for cash rupees 5,000. Okay, purchase goods for cash rupees 5,000. So which are the 2 accounts over here? Here, since we are purchasing goods, we do not have goods account. Okay, we do not have goods account. Instead, we have purchase account. What is purchase account? Purchase account is the account which represents the goods that you are purchasing, okay? Especially your raw material. So the 2 accounts are purchase account and cash, and then cash account. Purchase account is real. Why? It is representing asset. So this is real account. Cash is also real. This is also real account. Now, when you purchase goods, what is happening? Goods are coming in. So this is debit, and cash. When you purchase goods, cash is going out. This is credit. This is credit. The next transaction, purchase furniture for cash. Okay, purchased furniture for cash. So which are the 2 accounts over here? The 2 accounts are furniture account, and cash account. Furniture account and cash account. Furniture account is what type of account? This is real account. Cash is what type of account? Again, real account. When you buy furniture, what is happening to the furniture? Furniture is coming into the business. So this you will debit. Furniture is coming into the business, so you will debit furniture. Now, when you buy furniture for cash, cash would be obviously flowing out. So you will credit this. You will be crediting this. Next one, sold goods for cash. Okay. So which are when you sell goods for cash, which are the 2 accounts? The 2 accounts will be cash and sales. Now, we do not use goods account. We will be using sales account. Sales account represents the account that you, the goods that you are selling. Okay? It represents the goods that you are selling. So the two accounts over here are cash account and sales account. Cash account and sales account. Cash account is what type of account? Cash account is real in nature. Sales, what type of account it is? That is also real in nature. Now, when you sell goods for cash, cash will be coming into your business. So that is debit. And what is happening to the goods? Goods will be going out. So you will pay. The next transaction goes like this: paid rent for rupees 1,500. Paid rent for rupees 1,500. So what happens over here? Which are the two accounts which are involved over here? The two accounts which are involved over here are rent account and cash account. Because when you pay cash, what happens to the cash? Cash would be going out. Okay, when you pay cash, what happens to the cash? Cash would be going out. So rent account is what type of account? We know rent account is nominal. Why? Because rent is an expense. Okay? Rent is an expense. So rent is nominal in nature. Cash, we know this is real. Now, what is the golden rule for a nominal account? The golden rule for nominal account is debit all expenses. So you will be debiting, and here cash account you will be crediting. Okay? Cash account you will be crediting. So so that is about that particular account. Now let's move on to the next transaction. The next transaction is paid wages rupees 1,000. Okay? The next transaction is paid wages rupees 1,000. So which are the two accounts over here? The two accounts over here are wages account and then cash account. Okay? Wages account and cash account. Wage account is what type of account? Wage account is a nominal account. Okay? Wage account is a nominal account. Cash account is real. Now, we know the golden rule for nominal account is debit all expenses. So you will have to debit, and then cash account, it is real. So when you pay wages, what is happening to the cash? Cash will be going out. That's about that. Let's move on to the last transaction. The second last transaction tells us receive dividend rupees 500. What is dividend? Especially when you invest into shares, when you invest into stocks, you will be receiving dividend. So dividend is actually a kind of income for you. When you receive dividend, what is actually happening? You're getting paid cash. You're getting paid cash. So how do you, which are the two accounts over here? The first account would be cash account. Okay, the first account would be cash account. Second would be dividend account. The second would be dividend account. Cash account is what type of account? Cash account is real. Dividend account, we know this is nominal. Okay, dividend account is nominal. Cash account, what's a golden rule? A real account, what is a golden rule? Debit what comes in. So you'll be debiting this. Dividend account, what will you do? Dividend account is nominal. Golden rule is debit all expenses, credit all income. So you'll be crediting this. Last transaction, sold machinery for cash. This sold machinery for cash, rupees 5,000. Sold machinery for cash, rupees 5,000. Which are the two accounts over here? The two accounts over here are cash account and then machinery account. Okay. So when you sell machinery, what happens? Machinery would be going out, cash would be coming in. Cash is what type of account? Cash is real in nature. Machinery is what type of account? Machinery is also real in nature. Cash account, golden rule is debit what comes in. So you will debit this. Machinery, what happens to machinery when you sell machinery? Machinery will be going out and you will credit this. So with that, we've completed this simple exercise. We have picked up on the transactions. We identify the type of accounts. We identify which are the accounts involved. We identify the type of account. And then depending on the type of account, we figured out the effect by applying the golden rule. So this activity will help us to go about with the preparation of the journals into the books of accounts of a firm.